Hi, my name is Brian Pulis. I'm one of the principals with Pulis Investment Group. In addition, what I also love about residential real estate, and specifically multifamily properties, is that there's always a tenant pool. There's always people looking to rent apartments. So the more efficient we market our places, the more efficient we develop units that people are attracted to, the greater our ability to keep these units rented. The other area, which is, I guess, the icing on the cake when it comes to real estate investing, is the fact that we can leverage this asset. Now, the banks are always willing to invest in a good quality property, a property that has a good, solid management team behind it. And with multifamily, that's how the properties are judged. They're judged based on the individual property and the management team that comes to the table. So with us, we're able to with very little money down, so by putting, say, 15 to 20% down on an asset, we're able to then get the banks to finance the balance. The benefits of investing in Canadian real estate first starts off with our government. You know, over the last few years, Canada has really positioned itself or put itself in a position where it's greatly respected by other countries as to how we control our financial institutions. All you need to do is just look at our mortgages here and how it's more difficult here to obtain a mortgage than, say, in other countries. Here it's near impossible to go into a property without putting some of your own skin in the game, so that you definitely have to go in with a deposit. The amount of years of amortization is also being scaled back. Canada's always been a little bit more conservative as to how they regulate the banks, so therefore how the banks then in turn lend the money out. The other area that really attracts us to Canada, where the rest of the world is really observant of Canada, is the fact that we're very rich with natural resources. And what basically that means is that the rest of the world need and want what we have, which basically helps control our economy, helps influence our economy and keep our economy continuously growing. So if we take a look at the oil, or we take a look at forestry, we take a look at the water, we take a look at fertilizer, these are all things that are needed by other countries, and other countries are looking to, enter into deals with Canada to be able to gain, access to these. So all of these have a tremendous impact on our economy, which has a tremendous impact on real estate values, just simply from the fact that we have tenants that are working and able to contribute to society. I started investing in RRSPs back in the 1980s. At that time, it was very common that people were looking at alternative ways to supplement their retirement plans. It was basically feared that as the baby boomers approached retirement age, that the funds would be less available for them as far as monies that would be coming from the government. The other concern was the fact that as we started to get through like the 80s and 90s, that companies began to scale back their RSPs, or their retirement programs. So this became quite a concern for individuals, and therefore financial planners and banks really began to capitalize on this and encouraging people to put money in their RSPs. My exception with that is that, and I'm not, I don't want to criticize like the financial planning industry as much as my experience. My experience with the whole program was that, after a certain period of time, I calculated how much money I'd put in and realized that there was no money that I made as far as investment, that I was fortunate to have the money that I gave them still in the account. I was also, in recent years, in the last 12 years, I've been the guardian of two investment portfolios, family members, that is. And I was able to observe, it was actually easy to observe with theirs because there was no monthly contributions kind of going into place. And that's what really, kind of confuses people, is that, they started off the year perhaps with $5,000 in the account, and then throughout the year they've been putting $200 a month more. And at the end of the year they're sitting there with $6,000. Well, the 6 is greater than the 5, so therefore they think they're up as far as their investment, not really calculating that they've been giving $200 a month over the course of that term. So with these two that I was a guardian of, it was actually really easy to monitor because a lump sum amount went in 12 years ago, and it was just simply every year being able to look at the statements and being able to see where it is. And I can tell you 12 years later that in both cases, the amount that's sitting on that statement today is less than it was when we gave it to them 12 years ago. Two areas that don't get enough attention, and surprisingly you might find that your local bank and financial planner don't have much knowledge about, is the ability to be able to invest your RSPs through your self-directed RRSP account into first and second mortgages, as well as limited partnerships through an exempt market dealer.